Good morning, good afternoon, and good evening, folks, depending on whatever time frame and time zones you guys are based in. I am based in London, so good afternoon from myself. First things first, before we begin any further, if you can hear me loud and clear, and if you can also see my screen, please do give me a sound and a screen check by saying yes or no, so that we can begin our intriguing webinar that we have on Bitcoin today. Thank you, Amutha, and thank you, Marcus. There is an echo from your side, your side. I don't know, Marcus. I think that could be something just on your side because everyone else, Frankie, Amutha, and everyone else haven't really mentioned anything. So, Marcus, that could be just an issue on your side. So today's webinar, the masterclass series, cannot come at a more timely fashion because cryptos are in a massive meltdown. Why that is happening? Where could we see the bottom in terms of the Bitcoin price? In addition to what we discussed last time during our conversation, that would be all part of this particular webinar. So stay tuned with us, and as we have plenty of discussion around Bitcoin and cryptocurrencies. A bit about myself. My name is Naeem Azam. I work as a chief analyst for Trade. My wealth of experience spans well over 15 years. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon and as an equity trader with Bank of America. Many of you may have seen me on tier 1 televisions like Bloomberg and CNBC, where we do our usual hits. In fact, right after the webinar, I do have TV straight after this one on Bloomberg Arabic, where we'll be discussing markets and cryptos along with everything else. Now, something that I wanted to bring to your attention is our social media channels, such as Telegram, Twitter, and YouTube. The recording of this particular webinar will be uploaded to our YouTube channel. So please feel free to head to our YouTube channel to see the recordings afterwards if you wish to. Now, EverTrade's unique technology and a proprietary product is called EverProtect, something for all of you guys to know. EverProtect is a revolutionary one-click risk management tool available on the EverTrade web trader and EverTrade Go app. With EverProtect, you can purchase protection against loss for a defined period after opening a position. If the protection ends and you have an open position that is losing, EverTrade will reimburse the loss directly into the trading account. The only cost is the EverProtect fee itself. Now, let's begin the risk warnings before I jump onto today's agenda, which is anything which will be discussed in this particular market cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, what is on the agenda for us? Some of the study questions you may be familiar with, or you may already know about them from our previous webinar series. So I would expect you guys to help us with those study questions. In return, that particular idea will very much emboss in your head that why and what are the uses for such a particular currency. Now, to begin with, the first question first, which is the very easy and the basic one, and I wanted to put that question for our newbies. So for those of you who know the answer for that one and who know what it is, so please help me with the first study question for today's webinar and setting the foundation for all the newbies here. What is Bitcoin? Absolutely correct, Amutha. Bitcoin is a digital currency, just like your fiat currencies. Bitcoin is also known as a digital currencies, but unlike your fiat currencies, Bitcoin is not controlled by any central bank. It's a decentralized currency. No one controls it. No one sets the price. Only the market participants sets the price for Bitcoin. And that is the beauty about it. Now, flash crash is the second question is obviously, talking about flash crash. Now, flash crash is quite an intriguing one because this is something that we are actually currently seeing in the market. Flash crash it happens when the market really begins to fall off a cliff and then it just moves in one particular direction. And this momentum or this move happens all of a sudden, and there is a sharp move in one particular direction. Now, this is something, but me giving you the definition of this one would make you guys very much familiar of the price action, because now we are sort of in a crypto market crash because prices are only moving in one direction and one direction only, which is skewed to the downside. Why that is happening, that's the next study question, which we will discuss shortly. But for now, what we wanted to lay out the foundation for is Bitcoin is a digital currency. It is offered by many central banks to their clients, and such those banks include Citi, Morgan Stanley, BlackRock, and Goldman Sachs. And as long as we do continue to see institutions and hedge funds coming into this space, we have nothing to worry about because these particular corrections are only healthy for the stock market, for the overall price trend. Now, flash crash is obviously what we've defined is by this particular diagram, this particular arrow when the market begins to fall off a cliff. Now, the next study question is quite an important one. Could you guys give me some idea that what is really moving the price for Bitcoin, or why Bitcoin price is really in a massive downward trend? So any answers are welcome. Remember, there is nothing such as wrong answers. I'm not here to point them out. What I'm here is to help you guys. And I wanted to see what you guys think, more importantly, that why do we have such a big crash in Bitcoin price? Why the prices have actually reversed, or they are trading where they are now? So do get your fingers working and really give me an answer on the back of that. What do you guys think? What are the key drivers for the current move in the markets? Okay, so Amutha has mentioned something really, really important. Two things that Amutha has mentioned is inflation, okay? And Frankie is also really referring to that one as well. They're saying the inflation is going up and that is driving the price of Bitcoin to the downside. The other reason, which is mentioned by Amutha, is the interest rate hike by the Federal Reserve, which, by the way, is really going to be taking place today. The meeting is at 7 p.m. London time. So you will see the Federal Reserve announcing its latest monetary policy action, and it is widely anticipated that the Federal Reserve is going to increase the interest rate. That interest rate hike is going to be somewhere between 50 basis point or a half a percentage point to 3/4 of a percentage point, or in other words, 75 basis point. Now, Venu has really mentioned a very, very intriguing point over here as well. It says that Celsius recently suspension of withdrawal statements from the depegging of ST, ETH or Ethereum in the secondary markets. This in turn has caused a sharp sell-off in Ethereum, one that has also extended the broader crypto markets. Right on the money, Venu on that one. And Frankie is adding something else over here, is some instability in the crypto institution assets like Luna, Terra, and Celsius. Now, we're going to put that point over here, and then we're going to explain that in a little bit more. So the crash in Celsius or by other crypto coins, such as the stable crypto coins, is that. So now we have three different factors. Factor number one, we have a factor number two right over here, and then we have a factor number three. Marcus, on the other side, he's saying the value of crypto is determined by supply and demand, just like anything else. Again, really happy to see these particular answers by you guys, because that is exactly what I kind of wanted to say. I wanted to see, and then that factor over here is demand and supply. So we have four factors so far from you guys that you guys have mentioned. Vino is echoing what someone else also talked about earlier about rising inflation. Now, Bitcoin, if we write Bitcoin over here, right, BTC, is known for its two different particular properties. And those two particular properties is, number one, is hedging, okay? So it is hedge against uncertainty, and it is hedge against inflation. So two things, uncertainty, and then the other one is inflation. Oops, that's gone a little bit up, but you guys know kind of what I'm really referring to over here. So I'm gonna write over here, and then over here I'm just gonna type U. Right, so right now, people have mentioned, our colleagues in this particular webinar, they've mentioned inflation. Now remember, Bitcoin over here is supposed to be a hedge against inflation. Why? Because there is a limited amount of Bitcoin. There's only going to be 21 million Bitcoins in circulation. Bitcoiners always said fiat currencies are not good hedge against inflation. In fact, they say that it's not a hedge against inflation at all because of the unlimited supply. Now, in terms of a Bitcoin, the argument has always been that yes, there is a limited supply. So that means as long as the demand continues to increase, the price should increase because there is a limited supply, and that should take care of inflation. But the fact that inflation currently is trading at 4-decade high, that is at 40 years high, what we are really looking at in terms of that is that Bitcoin prices haven't really increased or soared in the same particular manner like they did previously, right? So this is quite an important point to mention over here. And this has really dented Bitcoin's reputation as a hedge against inflation. Now, I am not saying that Bitcoin is not a hedge against inflation. Mark my words, listen to this particular sentence very carefully. The current circumstances have damaged, is the key word over here, Bitcoin's reputation as a hedge against inflation, because gold prices are only moving pretty much in one direction, and that is to the upside. We may not have the momentum in the price action like that. We may have a consolidation, but the overall upward gradual move is very much in play. Now remember, gold is also known as a hedge against inflation, right? So there's been Bitcoin over here, which was like widely considered as hedge against inflation, and then you have gold. Now, second thing about is uncertainty, right over here, which we mentioned, right? Uncertainty, that is because of the geopolitics, because of the Federal Reserve making policy mistakes, leaving loose monetary policy for an extended period of time, and everything within that, right? So what we're really looking at from that particular aspect really over here is that yes, we do see that. Yes, Bitcoin has acted in the past as some sort of a hedge against inflation, against uncertainty. But now what we have is we have the stock market, which is the S&P 500, okay, and then we have a Bitcoin. They're moving in the same direction, meaning when Bitcoin prices move up, we see the S&P 500 or the stock market moving to the upside. When this moves to the downside, we also see Bitcoin prices moving to the downside. Now, a hedge against uncertainty really means when the S&P 500 index moves to the downside, the gold which moves to the upside, because people consider this one as a hedge, we should see the same sort of phenomena, same sort of market price action for Bitcoin prices as well. And that is in momentum in the price action skewed to the upside. But that is not what we are seeing. Again, that reputation has been very much damaged. Now, what we're covering over here is something that we have never covered before in our previous particular webinars. So if you do find it slightly bit more difficult to understand that, again, I would recommend you to go back to our YouTube channel and then watch the recording of this one, because there are a few interesting characters over here that we're discussing. Now, interest rate over here, or inflation, shall we say, is in interest rate as the Federal Reserve is increasing because they're wanting to bring inflation down. What is that doing is that's moving the dollar index to the upside, okay? So let's just represent that dollar index by the dollar sign. So this increase in interest rate is moving the dollar index up to the upside, or the dollar, making the dollar stronger. Now, when the dollar becomes stronger over here, what we see the BTC over here in terms of the dollar prices moving to the downside. That is taking further steam out of the Bitcoin rally, which is trading now in between $20,000 to $21,000 per Bitcoin, which we will again go onto the charts and we will discuss everything on that. Now, the last 2 points that we mentioned over here is Celsius and stable coins like Terra Luna. Now, Celsius, this was long coming when Terra Luna collapse happened, which was a stable coin and algorithmic coin. When it collapsed, it was very much clear at that time that we are going to see what we are looking at today, and that is that other DeFi space, other sell coins, other projects like Celsius, they were going to see a massive momentum to the downside. People losing their faith in that particular circumstance, in those particular projects. Hence, we are seeing that. Hence, we're seeing projects like Celsius and many others will really come under pressure in the coming days, and that will create a lot of pessimism in the crypto market space. Meaning, all of that would be very much negative as these projects will begin to dump their holdings for the survival. So we will see more selling pressure coming onto the market, and that would push the prices lower. So the only solution to that is, of course, a regulatory environment and people coming from the regulatory side supporting that particular element from that particular perspective, right? So that is something that we need to keep an eye on. Now, the last one that someone has mentioned over here is, of course, demand and supply, right? So demand and supply over here really is really talking about, okay, where does the demand sit and where does the everything else sits within that? Now, what do we mean by that? So, because as we discussed earlier, the supply in Bitcoin case is very much, covered, right? We know that Bitcoin is only and only going to be at 21 million, right? Well, Bitcoin altogether. Now, on the demand side, we saw a lot of institutions, we saw corporate treasuries such as Tesla and many other companies investing in Bitcoin, and many investment banks which really sort of started to invest in that space. Now, that was really pushing that particular element higher on the demand side. But now with the crash in the space, what we have seen really is, yes, now there is less demand from that particular perspective. We're not really seeing any good positive flow. So we need to see that flow of information changing, and that will really bring demand back. And then who knows? And then when the flow of news will begin to change, we may see that these bills, these bigger hedge funds and institutions, may actually show that they took the opportunity in the current market positions, in the current sell-off, to really strengthen or firm up or add more Bitcoin in their positions. Now, enough about that. What I kind of wanted to do is I wanted to go back into our charts and I wanted to discuss the price levels, because we got about 6 minutes remaining before we come to the end of this one. So is everything clear so far in relation to the fundamentals to everyone? Because that is quite an important one for us, that everyone is very much clear that what we have discussed so far. If you have any question, now is the time for you guys to really ask any questions. I wanted to read some of the comments also over here. Marcus is saying that Bitcoin is a digital gold and gold is just plain gold. Bitcoin is so much easier to own. Absolutely, Marcus, you are absolutely right on the money. Move, buy, and sell cheaper and easier to keep safe than gold. Gold, however, is much slower, less volatile, and everything else. You are absolutely right on the money, Marcus. Vinu is also saying that rising inflation is now expected to spur a bigger than expected interest rate hike by the US Federal Reserve this week, creating more headwinds for BTC. That is, again, very, very correct. And a lot of that pessimism in relation to Bitcoin price, again, I wanted to mention that to you guys, is already priced in to a larger extent. So you know what? Today, an element of a surprise for the stock market could very much be to the upside, because market participants are very much worried about what is happening in the market. They are very much worried about recession. They're very much worried about the Federal Reserve's monetary policy. They're very much worried that how increasing interest rates are really going to be impacting everything else. So today, there is a potential of a complete different market price action really taking place. So something that you guys may want to pay attention to today when we do see that price action. Now, let's go back and then have a look at the price action for Bitcoin price. And then for that, what we're going to do is, I think we're going to go onto the weekly time frame. Let me move the things on the sideways. So what we discussed previously in our webinars and in our videos was this particular price level of this particular support zone, the importance of this support zone between 18,977 to 15,362. I believe that this is a massive, massive area of support in terms of Bitcoin price. This is an area of new area of consolidation as well. Just like how there was a lot of consolidation which was taking place right around this particular area over here. Let me change the color of my pen so that you guys can see that. So this area was, previously was a massive area of consolidation. Now it could be very much over here. And something we also wanted to point out is on the weekly time frame, the RSI currently on the weekly time frame has dipped to a level of 26, below the level of 30, which is considered as oversold area. So now those odds of Bitcoin prices really moving to the upside are quite high, because the last time we did see RSI moving closer on the weekly time frame to 30 or below 30 was back in that time. So now we are seeing that. Does that make sense? Hello? No, I can't. At 1:30. 1:30, I said to them, I'm in a webinar. Please give me 4 minutes and then have a login. Thank you. Right, sorry about that. That was just the studio calling me in to asking me to log in to that one. So we will have to kind of wind this one very quickly. So what we really, again, going back to this one, and if you wanted to learn more, please do tune in to Bloomberg Arabic, where you can see the live interview, and then of course my case as well. So this area is of quite a big importance for investors and traders, and especially for me, the fact that RSI on the weekly time frame, which is very important, has dipped onto this particular side, is again quite an important one. So keep an eye on these particular price levels, keep an eye on the price action and the RSI. At the same time, I also wanted to see how the price action is panning out on the monthly time frame, because the monthly time frame is also an important time frame that we all wanted to pay attention to. So you can see that the last time we did see the RSI on the monthly time frame, below or near enough to 30 was back in 2019. Now we have seen 3 consecutive months of sell-off, and last time was over here when we did see that, and then we saw 2 months of positive gains in Bitcoin. So this particular sell-off is quite intense and very sharp sell-off in terms of the price. And if I draw a Bollinger Band, I can pretty much assure you that it has already pierced the lower line of the Bollinger Band, which means if you wanted to draw the Bollinger Band, all you have to do is to type over here to the Bollinger Band, and then this will add the Bollinger Band. So there we go. So what we are really sort of talking about in terms of the Bollinger Band is like these particular lines over here, this sort of a pink line. So the price has pierced that. I really don't want to go much more detail about Bollinger Bands. I'm going to take that study off, and we're going to be focusing on our particular one. Sorry, give me 1 second. Okay. Right. So we're just going to be focusing on, and then something also is the price is also touching is 50-week, because this purple line over here is also your 50-week moving average as well. So again, to go back on your weekly time frame, the price is trading near its 50-week moving average. On the monthly time frame, is also trading near there as well. So it's trading much lower. My apologies, just the chart just went bonkers, because I was thinking that how's that even possible? It's trading well below the 50-week moving average, but it is entering near an important area of support, which is right over here. Right now, guys, I have to cut it short by 1 minute, but I hope that you guys are going to be paying attention to these particular price levels, and I will see you guys next time, same place. Until then, stay safe.